United Kingdom is banning buying crypto with credit cards and loans. Together with that, Bitcoin is creating a secret recipe for a huge movement. Whether it's going to be up or down, I will reveal to you in this video. Hello ladies and gentlemen, this is Simon from My Crypto Paradise. On Tuesday I've told you that Bitcoin will pump towards these resistance levels. As you can see, we have done exactly that, and on Thursday I've told you that we will start moving down and we will dump, and as you can see we are doing that right now as well. The question is this the time to buy Bitcoin because right now we are going to the moon, or is it actually a higher probability that we will continue in this crash to the downside? We will analyze the probabilities and we will take a look what's more likely to happen on multiple time frames. Smash the like button if you feel like you are getting better in professional trading thanks to these videos, and let's start analyzing ultra high time frame on Bitcoin. In this video we will go through a lot because we will compare the current crypto funding rates to the liquidation heat map, ladies and gentlemen. We will also have a look at USDT dominance, ladies and gentlemen, and how is that affecting Bitcoin price. But we will start right now on a weekly time frame, ultra high time frame of Bitcoin, ladies and gentlemen, and keep in mind that understanding the higher time frames helps you to understand what is going to with a higher probability happen on the lower time frame. So we are always starting on a monthly and weekly time frame, so we have a better understanding of the overall trend and what's gonna happen with the higher probability on lower time frames, and that's how we can make much better trading decisions continuously. So right now let's just go very quickly through this weekly time frame. If you want to go in depth into weekly time frame, make sure you have watched the video I have recorded for you on Tuesday. We have been spending loads of time right here. Just very quickly, let's recapitulate what's happening. We are actually repeating the cycle from 2021, not the one from 2017 as wrongly loads of people think. So basically the same thing what happened in 2021. We have also been predicting right here the incoming of a new trend, and then we have started 5 moves to the upside, right? And then we have ended up the whole movement with the ending diagonal. Something similar happened in the current cycle. We also predicted the bottom right here at the $19,550. Then we predicted the new uptrend, and we have started to create a 5 moves to the upside and finish that with the ending diagonal. That is also one of the reasons why I've told you that we are going down in January 30. You remember that? Because I knew that we are starting a new trend in an opposite direction in a formation of zigzag pattern with the highest probability, because it's going to be a deep correction. It's a zigzag, maybe double zigzag, but right now everything suggests that it's going to go towards $44,000 in a single classic zigzag formation, ladies and gentlemen, and this is how it approximately looks like the whole cycle. You can find this on our website mycryptoparadise.com. I will share a link in description so you can check it out easily. So at the moment, where we at right now, I do believe that we are in the B wave and we are finishing it, and we are starting very soon the C wave, which will be another motive mode wave that will take us towards probably $44,000. So right now I do believe that we are finishing the B wave and we are about to move lower. Is the B wave already finished? How it's gonna unfold? Let's analyze. Let's zoom in inside of this price section and let's take a look and analyze our daily time frame. This is high time frame for us, ladies and gentlemen. So few things we can see here very clearly. Firstly, it's this channel, right? We are forming the corrective B wave mode in a zigzag pattern. So basically this higher degree zigzag formation is inside of this smaller B wave, all right? And we have few ways of how to analyze when the C wave is going to finish, and one of them is drawing a simple channel, right? So as you can see, we have already created the channel from the bottom of the A wave, which is this one, and placed it to the bottom of the B wave, which was this wave right here. As you know from the low time frame analysis, it formed a corrective contracting triangle, ladies and gentlemen, and we are already retested the channel right here. Plus we are at a major resistance zone, ladies and gentlemen. We are at the previous point of control. It's also the top of the secondary wave in which we have seen a loads of selling pressure previously. Looking at the volume, that was also the reason why afterwards we have been able to broke below it, and previously this was point of control that worked as a support, right? Now it's working as a strong resistance, And as you know, the zigzag formation is a deep correction basically, and we are already above the 50 mark of the previous wave. So this is basically the previous wave formation. We are above 50 already, so we are already in a deep correction. What does it mean? It confirms this wave to be a corrective zigzag wave, okay? And it just increases the probabilities of us starting to break lower very soon. What I want to see is a big volume going into the market. As you can see, we are declining on the price action higher. That is a clear divergence, and the higher probability is that once we see a break from this triangle, basically the volume is going to be on a sell side, not on a buy side, okay? So very soon we will have a very huge movement in the market, and I want to see, as we are grinding a little lower from the current market price or from a little higher, I want to see on the price action that is dragging the price lower an increase of volume, and that will basically increase the probabilities of breaking through this channel and also breaking through this support, turning it into resistance, and then we will have a nice high probability play setup where with Paradise Family VIPs we will be able to start getting very aggressively positioned in our trading strategies. Another thing that I can see right now is a clear shooting star right here, ladies and gentlemen. That is also a reversal signal. As you can see right here, if I zoom in, this is a classic shooting star candlestick pattern, as you know from our website. This very often, when it's formed at resistance, is forming a reversal signal because there was some pushing to the upside, but this liquidity, the bears distributed, sold their crypto on the buying liquidity, and that's why you see this big wick but a very low and little body of the candle. This is usually a reversal sign, so it's just adding up to the probabilities of a reversal from near prices, ladies and gentlemen, and it confirms that with the highest probability this is really a finish of the zigzag pattern formation that we are doing inside of this B wave, ladies and gentlemen, and we are very soon about to start moving to the downside. If we take a look at the oscillators on stochastic RSI, we can see that we are heavily overbought. Previously it finished with breaking lower. For example, when we were at the similar levels right here in March, we then started to move to the downside. Right here, when we were at the similar levels in the overbought zone on a daily time frame in January, once again we started to crash very soon afterwards, right? And right now we are overbought for a very prolonged period of time, so the move lower, the correction, the healthy correction of this market is due, and it seems like based on these indications that the daily time frame is really bearish and it's gonna happen very soon. As you can see on the RSI indicator, we are also having a bearish divergence, okay, because the RSI indicator is seeing higher highs. However, the price action, as you can see right now, is having lower highs. That is a clear bearish divergence, ladies and gentlemen. As you know from our website, when the price is making right here lower highs but the indicator is making higher highs, this is a hidden bearish divergence, and it's suggesting that even though the momentum is there on the daily time frame, somebody is pushing the price down, somebody is distributing the buying liquidity. That's why the price action is not able to create a higher high the way the indicator does, okay? So bearish divergence on RSI. Together with that, we are in an overbought zone. For the last time we have been here in 2024 December, okay, and we have just touched this zone of 70, and afterwards we have started to have a sharp rejection. If you have been around, if you have been subscribed in this channel, you know that we have been calling this top perfectly, then this bottom as well, because you and me together we have been able to recognize this pattern as ending diagonal, and then it was very easy to just follow the waves, right? Let's right now zoom in inside of this C wave, of this zigzag formation, ladies and gentlemen, because by calculating the subwaves of the C wave, it can give us another confirmations and indications when the C wave with the highest probability is going to be finished and when we can finally start moving to the downside. So let's zoom inside of this, ladies and gentlemen. Right now we are looking at 4-hour time frame. That means every single candle is representing a 4-hour trading activity, okay? Here you can see the same channel, the same zigzag pattern, but the subwaves of this zigzag pattern are much clearly visible and help us to understand what's the next move is going to be, when we can enter, when we can position our stop losses, etc., when to take targets. It's absolutely beautiful, and the Elliott wave theory with the Paradise team we have prepared for you to learn for free on our website mycryptoparadise.com, because really my goal here is to make sure that the crypto trading space is getting much more professional, much more long-term focused and less emotional, okay? And just wishing when you buy a coin that it's gonna pump to the moon, you will get rich, and that's it, right? Most of these coins are pyramid schemes, so the best you can do for yourself is to really learn proper professional trading tactics and make profits slowly but steadily and with focus on the long-term profitability. Right here we can see that the A wave, which is basically this one, okay, which is a motive mode wave, subdivided itself into 5 smaller waves, right? We have been analyzing that in the previous videos. So this is the A wave, and it's very important to understand that after the motive mode wave finishes, a reactionary B wave starts, okay? And it usually, if it's a deep correction, it goes to around 50% of the A wave. If it's some more complex correction, it doesn't retrace that much. For example, if it's just a triangle or double 3 formation, it retraces just a little bit. But if it's a zigzag, in which I believe right now we are trading in, it's a deep correction and it usually goes to around 50% of the previous A wave. If it's a deep correction, extended one, it goes most of the times maximum to 0.618 Fibonacci retracement level that you calculate using the Fibonacci retracement tool from the top and the bottom of the A wave. And as you can see, I have done exactly that. This is the 0.618 Fibonacci retracement level, and we are right now here, okay? This is a very big resistance. Very rarely it goes a little bit higher towards 786 Fibonacci retracement level, ladies and gentlemen. But as a professional traders, we need to be prepared absolutely for everything. As you can see, this is also a structural resistance, so we need to be prepared that it can go right here, right? And based on that, we just prepare ourselves, our strategy, our stop losses, the way we position ourselves into the market, etc., right? That's then depending on your own personal trading strategy. If you want to approach it more aggressive, if you have been doing well in the past and you have accumulated loads of profits, more defensive, if you have been having a rough months before, etc., then it depends on your methodology, on your system, right? But right now it seems like we are holding very well below this resistance, and there is a very low probability of going higher, even though there is a possibility of it, right? If some new inflow of money will enter the market, but the probability is very low of it, and the professional trading is just about working with probability. So being able to analyze the market, understanding, okay, so this is a big probability play, I will risk this much, this is a low probability play, I will risk this much, etc., and basically adjust by monitoring the market all the time your tactics and your trading strategies. And that's the only way how you can be profitable in the long run, right? Not just doing one big trade, going all in, etc. You can be lucky a few times, but it's very dangerous. It's very dangerous, and the maximum survival path with this kind of system is maximum like 1 to 2 years, right? Then you understand, okay, this is not the way. I will need to start counting my probabilities, and I will need to start developing some trading strategies, some trading systems, and doing it a little bit more professional. If we take a look at the oscillators, what increases the probabilities of having a price action lower right now or very soon is the histogram of the MACD indicator. We can see a clear bearish divergence. As you can see on the lower time frames, the momentum is already decreasing. That's the opposite of what we have seen on the daily time frame, right? That means that the momentum of the people that been pushing the market towards that $97,000 from around $86,000, the momentum is decreasing, right? And we already know that this price action wasn't created by some big boys, it was created by leverage, and we will be actually confirming that by looking at the liquidation heat map, the funding rates, and what's below us. There is $14 billion, ladies and gentlemen, below us, and we will be talking about that just in a minute. But right now it's very important to see that we are creating a strong bearish divergence. As you can see, the price action is making higher highs, but the indicator is making lower highs. This is a classic example of a strong bearish divergence, okay? And not only the MACD histogram has it, also RSI indicator has the same bearish divergence as well, ladies and gentlemen. So this is just increasing the probabilities for the bears right here on 4-hour time frame as well. Let's analyze right now the subwaves of the C wave, ladies and gentlemen, that started right here after we have started to break from this contracting triangle. So basically you understand that the C wave is a motive mode wave. That's why it also subdivides itself into 5 smaller waves. This is descending zigzag. Right here we have ascending zigzag. This is the C wave, okay? And it subdivides itself into 5 smaller waves. So this was the first wave, second wave, third wave, fourth wave, and right now we are finishing the fifth wave. If not already finished, we will be talking about that on a lower time frames. So we can see that we are pretty much finished the C wave, if not already. That's another bearish sign. What I want to see right now is to overcome this moving average trend line, right, ladies and gentlemen, that we are fighting with right now. As you can see, we have tested it once. For once it held, but so does this resistance right now. As you can see, Bitcoin is struggling a little bit with it, but this moving average will not give up that easily. As well as you know, it's usually 5 touches what I want to see before I'm quite sure that the 6th and 5th one is going to break through it. On the weekly time frame, for example, you remember we have been counting that together. The 5th wave went through, and on the lower time frames it's going to be something similar. So right now we are testing it for once. I do believe that there might be some consolidation going on right now after we start getting through it. If we will go through it right now, considering this resistance will hold perfectly, I want to see big volume coming in as we start going to the downside, because that will increase the probabilities that we will start breaking not only through this ascending trend line, but also through this support zone. And this $93,000 support zone is very strong. Let's right now analyze this final 5th wave of the 5th of the full C wave, ladies and gentlemen, which will help us to understand when we will have, with the highest probability, the reversal to the downside. So right now let's take a look at the sub waves. So this was the start of the 5th wave, because here we finished the 3rd wave, here was the 4th wave, and then we started the final 5th wave. So the sub waves were 1, 2, 3, then we had a prolonged 4th wave, ladies and gentlemen. We will go in depth of this 4th wave on 15 minutes time frame, and after that we have started a final 5th of the 5th. And as you know, the 5th waves are also a motive mode waves, and they are subdividing itself into either an impulse itself or an ending diagonal. In this case, I do believe that we have been forming a classic impulse, and as you can see, we have already formed all 5 waves. 1, 2, 3. It's a classic. This is absolutely classic for the 3rd waves, because they are most impulsive ones, that they go slightly above the channel. Okay, so I do believe here finished the 3rd wave, then we had a simple 4th wave, and then we have finished 5th wave right here. Everything suggests so that we have finished the final 5th of the 5th right here, ladies and gentlemen, and after that we have started to crash to the downside. Right now I do believe that we might start to form a new impulse to the downside, ladies and gentlemen, and as you know, it subdivides itself into 5 smaller waves. Right now I do believe we are forming the secondary wave. If we take a look at the Fibonacci retracement, we can go up to $97,000, ladies and gentlemen, but that's pretty much it. If we are really finished right here, the 5th wave, we are about to start moving to the downside, and we should not go above the $97,000. If we will start to move above the $97,000 mark and start forming some bullish formations on an ultra low time frame, I will start to recalculating the Elliott wave count. But for now it seems like we will be holding well even below this moving average trend line. But again, 97 is really the most important thing, and then I will be very interested to see, because here is the VPVR volume, the reaction at the $95,000 mark, ladies and gentlemen. If we will have a small reaction that will just finish at the top of the 1st wave, and we will start getting rejected and create a final 5th wave that will push us towards this support zone, I will believe that we are starting a first wave of a new impulse that might finish right about $93,000, and that will basically be the first wave of our impulse that will take us towards $44,000 after we are finished fully with it, because it will basically start the first wave of the final C wave, right? But to say that for sure, we will need to wait for more data. What would be definitely great for the bearish case is that if we are about to close on weekly time frame the candle below $95,000, even better would be below $93,000. Let's see what today's price action and the price action on Sunday will bring, but it would really increase the probabilities for the bears. Let's right now analyze this price action on ultra low time frame. We had the double 3 right here, but here I also forgot to say about the volume. Take a look at the divergence decisions on the volume together with the price action. That was also one of the reasons why you see the prices crashing right now. So this is really good, and here as you can see the volume is really absolutely nowhere to be seen. And if we stay below this important resistance and also below the moving average trend line, below the orange trend line right here, once the next volume pick up, I do believe it will be on a sell side, not on a bull side. So we are monitoring the price action right now, ladies and gentlemen, and we are waiting for the next volume spike, and I do believe that it will help us to start the third wave that will take us towards firstly 95 to retest this price action, and then $93,000, ladies and gentlemen. So if we will be holding below these resistance levels, I do believe that the price action might look something like this, with the final fifth wave finishing at around $93,000, even slightly below it. That would be great. I don't have much time to go through the double three and through the impulse on ultra low time frame. We have been going through it on a low time frame already. I want to check up with you the crypto funding rates together with the liquidation heat map, and then a little bit of USDT dominance, because that might be a little bit problematic with the USDT dominance. Look at the funding rates. Right now we can see that we have a little bit negative funding rates. What does it mean? That there is more short positions in the market than long position. However, on just daily time frame, if I shift towards 30-day time frame, we can see that we are clearly extremely over leveraged on the long side. That is also visible at the liquidation heat map. There is just so much of liquidity below us, and it's actually, by calculating the liquidations, almost $15 billion, ladies and gentlemen. In comparison with the upside, there is only around $3.2 billion, ladies and gentlemen. So how is it possible that the funding rates right now on the daily time frame are negative? Is very simple, because here at the top we are slightly getting some leverage sell pressure. However, as we have been grinding to the upside from that around $85,000 for the past 30 days, basically there was so many long position opened, ladies and gentlemen, that have liquidation levels below us, and once one liquidation level is hit, it will automatically create a short position and help the market to keep moving to the downside. And in the previous videos we have been talking about the potential domino effect because of that, right? Because one is hit, then it creates a sell pressure in the market, because a long position will be closed, automatically a short position will be opened, and it will basically start liquidating all these positions until around $85,000 from where it started. So by looking at the crypto funding rates, we might understand that there might be a spike higher to get rid of these over leveraged short positions to around $100,000. So it's not completely one-way approach. That I do believe that from these prices we will start moving for absolutely certainty to the downside. There might be some spikes to the upside first. As you know from the daily time frame, there is a possibility that we will be retesting $102,000, and we need to be ready for that. As a professional traders, you need to be ready for everything. But the main point is that everything is suggesting that we will have, from a long-term view, the next major huge movement to the upside, to the downside, with the higher probability than to the upside. Ladies and gentlemen, there is also one thing I wanted to discuss with you, which is USDT dominance. There is a potential for a fifth wave to be a little bit lower, which suggesting the potentiality that the Bitcoin may retest the $102,000, because it would actually work nicely percentage wise with it. So we need to be ready for that. However, once we start overcoming these resistances, we will get much more aggressive on a sell side, because it will increase the probabilities that this was actually finished and we are about to start a new impulse higher on the USDT dominance. And as you know, if the USDT dominance is bullish, the money flowing from the crypto coins and from the Bitcoin into USDT, into stable coins, and that's basically bearish for the crypto market. I will keep you updated about this. I didn't have much time to go through it in the next video, hopefully, which I'm recording for you on Tuesday. Until then, trade smart, trade like a professional, and I will see you next time. Cheers.